U.S. pending home sales unexpectedly fell for a second consecutive month as limited inventory and soaring prices deterred prospective buyers. For more on the health of the real estate market, we welcome Philip White. He is Sotheby's International Realty President and CEO. And Philip, I think this is one of the most interesting stories, certainly one of the most interesting asset classes in the markets over the last year or two. How much of an asset class is this? It's not really just about living in a home anymore for a lot of Americans, is it?
I think that's right, Matt. Thanks for having me on. I think about the market. I sort of think about four things. I think about, the low interest rates, the great job the Fed has done, which really has propelled the stock market, and, work from home. And I think the third one, which you're touching on, is I think, people are viewing residential properties in more of an investment class manner. I think they've always thought about the price appreciation, but they're literally seeing it almost every day now. So I don't think they want to be left on the sidelines. And with this, low rate economy, it really makes it very compelling for them to invest in residential real estate.
Yeah, I was talking today to Catherine Hawkins. She runs Vertical Capital Income Fund, which is a closed-end fund, trades on the NYSE, and they have residential mortgage loans. And I thought, is there enough reward for the risk that you're taking? My mind going through the scenarios of millennials finally going out to the suburbs and borrowing $500,000 to buy a house. But she was saying, look, a lot of the product that we have is investors who have bought homes to rent out, and they're a great risk. How much of that is this market?
Well, that's certainly part of it, Matt. I mean, I do hear about, people buying houses for rental. I don't hear about them doing it so much as an investment, but I think, they're renting them out until they can change their lifestyle enough to move into that property. So and I'm really talking about more of the luxury end, the higher end of the market. So I'm not so sure that really impacts this part of the market. I think, again, they may be renting it out for 2 or 3 years while they're able to move their family into that property.
I got it. So that market is aimed at maybe a lower price point than you're dealing with at Sotheby's International Realty. I love to look at your website. I'm sure a lot of people do, even when we can't necessarily afford the products that we're looking at. What kind of business, what kind of pace are you seeing in that high end of the market?
Well, I've never seen it any stronger than this, Matt. We're seeing a resurgence of people moving back into the cities. Looking at properties there, we have on our website alone, searches in San Francisco are up 200%. They're up 173% in Manhattan. So we're just seeing a resurgence there across the board, Los Angeles as well. So, we're not seeing the migration out of New York City, which we did see to some degree last year. So, that's, we're very excited about that part of the market.
So you're not seeing, this isn't about somebody who was working on Wall Street or had to live in San Francisco who decides, you know what, I'd rather have a big fat ski chalet in Taos, and I can work remotely from there. You're not seeing that kind of exodus anymore.
Well, we did see a lot of transactions that, that's the work from home. And that spurred a lot of activity. And that, again, what it did was sort of change people's timeline. So they may have been thinking about buying that property, in 5 years or 7 or 8, but they really accelerated it. And, I think they just felt like they could work from home. They have more flexibility, and also people moved to be closer to family when they could work from home. So, that dynamic has really just accelerated the real estate market in a very significant way.
Are the buyers that you're looking at, when I remember buying my first TV and the salesman said, buy bigger than you think you need because you're always going to want it bigger. And the same thing when I bought my first house, a real estate agent said, you're always going to want to stretch and buy the biggest thing you can because the price even if it doesn't continue to rise the way we've seen it in the past few months, isn't likely to fall. Are you seeing people stretch to buy the bigger house?
Well, I think what's happening is, again, with this low rate, with the stock market, and the liquidity in the economy, people are able to buy a bigger house. And clearly, with the pandemic, you know, big is better, bigger is better. And we clearly saw that. And we are selling bigger properties, ones that have all of the amenities, the pools, the Zoom rooms, the gyms, the kitchens, the pools, the tennis courts. So, the amenity, loaded properties are really selling well.
What about spec builders? Are you seeing that happen the way we did, or even anything close to the way we did 15 years ago? Are people going out and buying land and building a new home, or tearing down an old one and building a new one to sell?
I mean, that's happening. And, I think just driving around, you see that where lots are being cleared. I'm actually out in the Hamptons this week, and, there are a lot of new builds going on here. Literally almost every day, I see a new lot being cleared. So I don't think we're going to get right back to where we were kind of pre-recession when we did like 1.2 million in new starts. But even if we can get, 3/4 of the way back there, that will certainly help inventory levels. I think that's one of the points you're trying to make, Matt.